The new year is here, and have you decided that this is going to be the year that you're going to get your personal finances under control and start investing for the future? Or maybe simply just getting more consistent with your investing if you've already started. Join me in this video today, and I'm going to share with you the simplest way to get started investing in 2023. So, hi, I'm Michael Sgarbossa. I started this channel, Save, Invest, and Grow Your Money, to share simple, effective strategies to help busy people like ourselves. I'm one of you guys. I'm busy as hell as well. I don't have a lot of time. So, those simple, effective strategies to help you get ahead effectively and create abundance of wealth for you and your family into the future. Now, the one thing that I've learned with investing is you don't need a lot of money to start. You don't need a lot of time, and you don't have to be great with numbers. You just have to do some really simple things right and consistently. So, if 2023 is going to be the year that you're going to sort this out, then I've got some simple tips here for you today to be able to set you on the path for success. So you don't want to get to the end of 2023 and go, I shoulda, woulda, coulda. I wish I started investing. I wish I did something, and should all over yourself. So the, the, I guess the simple thing about investing, it's much like growing a tree. All right. So first and foremost, a tree takes a long time to grow. It's just like investing. Building wealth actually takes a long time to develop. But just like planting a tree, if you do the right things simply over and over and over again, that tree eventually grows from a little seedling into a massive tree that bears fruit for you forever and ever. Now, with that tree, the first thing you got to think about is you need a seedling. With that seedling, you've got to have some fertile ground to plant that seedling in, and that seedling needs to be watered continuously over and over and over again, all of the time on a regular basis. So that's a pretty simple analogy. And with investing, it's really that simple. It's really that simple to get started investing and grow your money for the future. So the first thing you need to do is you need to find margin in your money. So what do I mean by that? It means, okay, you've just got to work out what do you spend every month and what's your income every month, and is there a gap there? Hopefully the gap's positive. It's not negative, and that's that money that you can save. Now, for most people, they don't really have a gap. They're spending the money on credit cards. That gap is obviously in the negative column, unfortunately. But what you need to do is you need to find that gap, no matter if you've got debts or you want to start investing, or what you need to do to be able to change your financial circumstances. You need to create some financial margin. So this margin is what I would call the water for your tree. So it's really important, okay? A tree is not going to grow without water. So the way you need to do this, you need to look at, okay, what's your expenditure? Work out, okay, do you have a bit of cash left over in every month? Are you actually creating some savings? And just really have a look at where all of your expenses are and go, okay, what are the things that it's important to you to create money for your future. So what are the things that maybe you can look differently at, or spend a bit differently, or maybe give up for a few seasons just to start to create that little bit of gap? So for instance, you might be able to go around, like, interest rates have been rising rapidly here in Australia and around most of the Western world in recent times. If you've got a mortgage on your home, the first thing you should do is go and actually talk to your lender and ask for a discount on the rates that you're already getting if you're not on a fixed interest loan. If you're on variable rates, you should be talking over directly to your bank and asking, hey, can I have a better rate here? And it's pretty easy to see. You can see what they're offering new customers. You're probably paying more than that. So that's an easy question to ask. You use your mortgage broker to do that for you. You can even change lenders if you should wish. So have a look at the really big expenses. Mortgage is one, insurances are another. Go around and have a look at and talk to your insurance provider and see if they can reduce your premium. Maybe talk to some other insurance providers to see if they can offer you a better deal. Look at your energy bills. Go to the Energy Made Easy .gov.au website here in Australia and see if you're getting the best deal for your energy. There's a really simple process to go through there. So there's a number of things you can do here to just save some money very quickly, and have a look at what you're spending as well. Maybe you need to make some decisions around making your coffee at home instead of buying at the cafe every day. Make that like a couple of days a week a treat instead of 7 days a week treat. Same with making your lunch. There are all sorts of things you can look at and go, okay, what am I spending my money on? what are the few things that I could cut out for a while just to create that margin? Now, with creating that margin, that's your water. Okay. So the first thing you need to do with that margin is you've got to get rid of any consumer debts. So if you've got credit card debt, if you're not paying off your credit card monthly to zero, then you shouldn't have a credit card. You should get rid of it because the interest on a credit card is 20+%. It's toxic, toxic debt. If you've got credit card debts, the first thing you should do with that margin that you create is use it to get rid of your credit cards. Get rid of that debt. Pay down your car loan. That's consumer debt as well. So consumer debt is a debt that costs you money. Okay, it's not a debt like your home mortgage where your home appreciates your value. It's debt where you've used to buy things that don't appreciate in value. They erode in value, or they have no, very little intrinsic value. So use that margin to pay down those debts. Very, very important. Now, what I call paying down these debts is it's sort of like preparing the soil for your seedling, for your tree. Okay, we want to plant this tree in really good soil. We don't want to plant it on the edge of a rocky cliff where debts are just going to erode away and wash it away. So once you get rid of those consumer debts, aim to look to create a bit of an emergency buffer. Okay, so this emergency fund is sort of like drought proofing your investments, drought proofing your tree. So as you start to grow your investments, if you have an emergency, if there's something you need to spend money on, the washing machine goes kaput, these are things that you don't expect to happen very often, or you have some sort of health challenge or illness that you've got to spend a bit more money on your health, then this is a fund that you can dip into where you're not going to turn off the tap that waters your tree every month. Okay, so that's a really important thing to do. I would suggest starting with aiming for at least just $2,000 to start with, and then from there, build that up to maybe 3 months worth of your living expenses, even up to 6 months worth of your living expenses. But get that $2,000 a month in first, and then from there, you could probably start to maybe invest some of your money, but still divert some of your margin money to build up your emergency fund to at least 3 months living expenses. It'll just give you peace of mind, okay, and will help to not let you get derailed and, like I said, create that drought for your investing. So the next step is now you've created your margin, your water for your seedling. We've created the fertile soil. Now we've gotten rid of the bad debts, with consumer debts. We've got ourselves a little bit of an emergency fund. So if some unexpected expenses come up, that's not going to then shut the tap off that should be watering our tree. We can plant that seed. Now, what sort of seed are we going to plant? We're going to implant an index fund seed. So what's an index fund? An index fund is simply a fund that buys a vast majority of companies in the market. There are all different types of index funds you can buy into, but a vast majority of funds across the stock market, or companies across the stock market. So you're investing not just in maybe one or two or three separate companies you're buying shares in, which you're very susceptible to the risks of those organizations and how they perform, but you're more investing in the breadth of the market. So, one company can perform very badly and give you very bad returns, or even go to nothing and go bust, but the whole market isn't going to go bust. So it's a very low risk way to invest. And what do wealthy people do? The number one thing that wealthy people do to get financial success is they don't lose money. They don't invest in risky propositions where they can lose their money. They invest in areas which are lower risk and of less risk, lower risk of losing their money, so to speak. Okay, so index fund, it's pretty simple. Go Google index funds. Two of the highest, or the most popular funds in Australia, you'll find probably Vanguard or iShares, which is supported by BlackRock Investments. They are two major global financial index funds, or firms that back index funds. So there's a couple of examples, but go on Google and have a look, and then you can have a look, and then within those funds you can then start to choose different options. They'll have growth options and high growth options, and a few different things like that. So if you're younger, if you're in your 20s and 30s, maybe even to your 40s, you could consider the higher growth options, because it'll give you greater returns, but also a little bit of greater risk. But if you're a bit older, maybe you're heading into your 50s and 60s, maybe you want to have a look at some of the the lower risk options. And there's plenty of literature on these websites you can read up to help you make those decisions. It's pretty straightforward. So once you set that up and you decide to invest in your index fund, then you've got the index fund seedling. So we've planted the seedling for our tree. You've then got to water that tree. And by watering that tree, the simplest thing to do by turning that tap on and making sure that that tap remains to run on a monthly basis, consistently, month on month on month, year on year on year, so this tree can grow big, strong, and bear fruit, is to automate those deposits. So once you've worked out what your margin is, what you can afford to automate every month, as soon as that income comes into your account, set up a direct debit, whether it's $100, $200, $500, $1,000 a month. Get that direct debit happening into that index fund on a monthly basis. First thing comes out before anything else when you get paid. Set and forget. You don't have to think about it. You've now turned the tap on. The tap's continuing to run. You've got your emergency fund in case any unexpected expenses try to derail you, and you don't turn off that tap. So you've drought proofed that strategy to be able to grow that tree. So, and the thing is just keeping invested in the long term, because if you have a look at the stock market over a long term, yes, it has ups and downs, but if you look over at 10, 20 years, it just it's up and down, but it continues to go up over time. So the key thing is time in the market, being there for a long time. And the only way to get started is to get started now, because every year you don't get started is a year that's missing on the back end. You're missing that hockey stick growth at the back end where compound interest really starts to take off and that tree grows rapidly. So I hope you found that really interesting today. I hope I've encouraged you and inspired you to start investing, to have a look at your money, to try and create that margin, that water for your seedling, and to get started in investing and grow your family's wealth. If you've really enjoyed this, please share this with others. Feel free to share this video with others. Hit the like button, subscribe to my YouTube channel. And also I have a free PDF as well that I've got on my website, michaelsgarbossa.com. The link's in the description of this video. Go and get that PDF. It's a brief description of a very basic financial plan that I use to take myself from zero savings to buy my first investment property. I think you'll find that really, really useful. So have a happy new year to you all. Have a great 2023, and I'll see you next week. Thanks very much. Bye for now.